U.S. President Donald Trump indicating that he's ready to put 100% tariffs on Chinese imports. China says we'll fight to the end. So we got this escalation of the trade war between the world's two biggest economies. What about Canadian markets? Let's bring in Bruce Campbell, President and Portfolio Manager at StoneCastle Investment Management. Bruce, incredible. Can we start off, though, with these material stocks, rare earth stocks on fire today, especially if they have the prospect of producing within the USA?
Yeah, I mean, even the last 3 or 4 trading sessions now, any stocks in the US that have US properties that are in that rare earth space, oh my gosh, there's some that have really moved, that's for sure.
And copper as well. I'm just going to check. Maybe we can put up a graph of the copper price. But if you're an Ivanhoe Electric with the prospect of producing copper in the United States, and they say they have a fancy new technology to do it. Yeah, look at that copper now above that $5 US a pound. Not doing much today, but above $5 US a pound.
Yeah, I mean, the copper price has bounced up, and now you're really starting to see a follow through with the copper stocks as well. It seems like this rare earths and precious metals rally has now been extending into the copper stocks.
And BHP's CEO, Mike Henry, a Canadian, says that mining giant is thinking that it might resurrect shutdown mines in the so-called historic U.S. copper belt. That's in Arizona, the Globe Miami region. They, in fact, have 4 old mines that were closed decades ago, but there's so much interest in copper domestically produced in the United States.
Yeah, I mean, between the domestic aspect of it, and then also with the fact that the commodity prices come up so much, those mines that were not profitable in the past, now they're actually profitable again, even as they, maybe mined out the best grades that they had in the past. They're now getting into areas where they can still be profitable given the grade and the copper price.
Yeah, maybe we can put up a chart for HBM, Hudbay Minerals. That stock climbing as well, hitting its highest in at least a year today. So, and they, as you know, are working on opening a mine in Arizona too.
Yeah, I mean, there's been lots of moves for sure in these copper stocks and the rare earth stocks, and I mean that just tops off with what we've seen in precious metals, which you talked about before.
Broadly, how are you viewing the markets right now, Bruce? Do you think the AI trade is showing signs of age?
I mean, certainly it's, it has had a big move. And, the thing that a lot of investors are going to be watching is going into earnings season, what's happening with a lot of the AI companies that are providing services and whether or not that ramp up continues to be there. And then the second thing is also looking at what we'll see from a CapEx perspective for a lot of these hyperscalers, whether or not they're going to continue to be spending money, which will of course drive the companies that produce the chips and the equipment. Things like why NVIDIA is now the most expensive, most valuable company in the world.
Do you think investors will at some stage just get wary? Hey, we're sinking hundreds of billions of dollars into these data centers. The profit payoff may not be as big as hoped.
Yeah, I mean, we've seen the movie before, right? If you invested for any length of time, what happens is that the multiples continue to expand. And as those multiples expand, sooner or later, the growth rate starts to slow down. And as that accelerated earnings start to just level out, now all of a sudden investors start to question, okay, why are we paying these increasingly higher and higher multiples for stocks where it's potential that the earnings have topped out from an accelerated pace, and that, yeah, they might still grow in a linear pace going forward, but it's not going to be that accelerated growth. So the multiple that we're paying isn't worthwhile. And that's where you'll start to see them fade. Where that is, I mean, that's anyone's guess at this point in time, because there just is so much talk of AI, but we know that will eventually start to slow.
What about the Canadian market beyond the resource stocks, Bruce? Are you seeing any opportunities there?
Well, I mean, if you look at the last year, what we've seen is the banks have done really well. I mean, that has a lot to do with probably the overall economy And then as well, you see some of the commodity stocks. We really haven't seen much going on from an energy perspective. The energy stocks have performed relatively well, but I mean, that comes back to really how well those companies now are managing their capital. They're not spending like they used to. They're returning a lot of capital back to shareholders, which is fantastic. And so even in an oil price that hasn't really done much, those stocks have produced a lot. But if you started to see that sector kick in, if we saw expansion in the economy globally and we saw energy starting to rise, then you'd really see the TSX move even faster than it has now.
Although, as you know, the old oil price dipping below $60 US this week.
Yeah, and there's tankers apparently sitting, out in the ocean full of oil looking for a place to go. So it doesn't look like the price of oil is going to, start to really accelerate at any point in time soon.
One thing that came up in the open today, Bruce, was the worries in the credit market, especially the subprime and private lending markets south of the border. We've had a couple of bankruptcies related to the U.S. auto sector, and at least one of these companies had collected a lot in private lending. Some people, Politico.com, for example, ran a story saying this is sending a shiver down the backs of people who remember 2008.
Yeah, I mean, everyone has scars from 2008. And so as a result, anytime you see that credit spread start to jump up or the option adjusted spread starts to peak up, then people immediately start to get panicked and maybe not panic's not the right word, but they certainly get concerned about, is this going to be another credit event? And of course, nobody spotted, I shouldn't say nobody, but very few spotted the credit event before 2008. Now everyone's going to be ready for it the next time it comes around. And maybe that's what saves it from happening. But it certainly is something that you want to watch. And they always the talk is always that the credit markets are smarter than the equity markets, and certainly there's been some concern there in the credit markets right now.
Bruce, always good hearing from you. Thanks very much indeed.
Yeah, thanks for having me.
Okay, Bruce Campbell of StoneCastle Investment Management.